just around lunchtime here. This might be, I'm a little biased, but one of my favorite sessions of the day here. I have the pleasure of going through the very interesting topic of legal. I would say the most important one, as I just mentioned in our previous session. And so it's not just in order to get the legal right, you need to have the right lawyer to help you there. And of course, we as advisors do everything we can to make it easy so that you can have great and productive conversations, but we're not lawyers. I want to make that very clear. So you need great counsel. And I've had the pleasure of knowing Robin here for, I think, a decade now, or close to it. Because of my previous compliance business. She is one of the pioneers, as we're going to learn, from around the Jobs Act era, which is the underpinning legal infrastructure that powers a lot of this tokenization stuff. And of course, she's adapted with the times and has now since been working on not just traditional Jobs Act related, opportunities and projects, but also now tokenized ones as well. And we even, again, have been able to work with her ourselves, not just our clients. So I can speak firsthand just to say how amazing our experience was, how much I learned that I now get to share with a lot of you. But as you can see, Robin is thrilled and happy to share as well. So please, without further ado, Robin, tell the crowd a little bit about your background and maybe how you got into this whole space.
Hi, Herwig. Thank you so much for including me in this amazing 3-day event that you guys have really pulled off. I'm really delighted to be here, and I'm grateful for this super warm welcome that you just provided. For those of you who don't know me, I'm Robin Sosnow. I'm a corporate and securities attorney, newly minted attorney in the state of Florida, and more than a decade into my practice in New York. I own and operate a law firm with a team of 5 attorneys that are focused on the Jobs Act space, which, as Herwig alluded to, over time has really evolved and converged with the world of digital assets and digital asset securities, which are the primary focus of this conference and today's panel. So we work with companies that are raising capital. We work with funds that are raising capital. We work with platforms, some of which are regulated as funding portals or broker dealers, and others that are not regulated or exempt from registration as broker dealers and facilitate private placement type activity. We provide regulatory compliance advisory services, and really try to support this ecosystem that we've been exploring throughout this conference. So excited to be here and to share some of the more finer points within the legalese of this all.
Yeah, but before we get to that good stuff, I do think it's worth discussing. What you're like me in a way where we came from that Jobs Act world. We saw this vision of equity crowdfunding is going to disrupt capital markets in its own way. It's going to put the retail investor first. And then suddenly this ICO thing came around and suddenly started, really disrupting a lot of this industry that had been building since 2012 in a very different way. And I think you are probably one of the few people like me who sort of had the experience already to know this is not going to end well. So maybe share with the audience, when was that first experience that you had with crypto in terms of, moving into this space?
Thank you so much for asking. So at the time that I was first introduced to the world of blockchain, it was early 2017. And I was operating Sosnow & Associates, which formerly was Law Office of Robin Sosnow. I'd been a solo practitioner for some time, and I was growing. And my core focus had been Jobs Act topics. So early days of Jobs Act, it was really just online capital raising under Reg D 506C. platform representation and issuer representation. And in the next year, I think in 2015, the Reg A amendments came into effect, and I kind of shifted gears and expanded into that practice area. 2016 was regulation crowdfunding. And in 2017, I had pretty ample, relatively ample experience in these practice areas. And I was brought in to speak before a group of partners at Hogan Lovells to talk to them about the Reg A exemption and the mechanics behind utilizing it for a customer of theirs. And it turned out that that customer was looking to conduct a tokenized capital raise. And for me, the tokenization elements were brand new. I hadn't had exposure to blockchain technology at that point in time. But I very quickly realized that there was this convergence happening of the regulatory framework that arose with the Jobs Act, and then this new technology that had tremendous possibility for distribution among retail investor networks. So at that point, I really committed to expanding my skill set and becoming more involved in the innovation that was happening around me, and wanting to support that, but in a compliance first format.
Yeah, no, and that's one of the reasons why I truly appreciate working with you, because again, for anyone who's sort of new to this whole space, people like to refer to the alphabet soup of exemptions, which we're going to touch on very, very briefly. But a lot of the time, and really traditionally in history of the alphabet soup, most of it didn't exist up until just the last few years ago. And the one letter that was used was the one that was used for just about everything. So to have folks that actually knew what they were doing with these new exemptions that were coming out, there just weren't that many, frankly, even outside of Robin, that were really taking the time to become experts in this very specific aspect of securities law. And that's something that I've had to be able to learn working with dozens of different attorneys, that there truly are just so many different facets and topics and points of case law that you really need to find the right experts, the right lawyers that know what they're talking about for very specific, nuanced, and gray area topics like this. So I just wanted to highlight that and really put that light on you. But with that, you've since,
I appreciate
fully
that.
into it. Yeah. Well,
Just
go
to
ahead.
add a comment. So, over time, the industry has evolved, including the crowdfunding industry, and there are resources for accessing counsel, beyond my firm, obviously. And one of those resources is the Crowdfunding Professional Association. So I'm on one of their committees, policy committee and attorney subcommittee, and we work with industry stakeholders to try to continue to improve access to capital in the US. And within my, just even on the attorney subcommittee, there are, I think, 10 other lawyers that are really invested in providing excellent legal services to the space. So I encourage everyone to evaluate some of those firms and those folks when investigating a capital raise that might involve one of the Jobs Act exemptions.
Yeah. And that's, again, another sign and a good trait of a good attorney, when they know to tap in and even recommend other resources as well. That's why you can trust her. But I do want to, again, highlight that those probably other 10 professionals are probably of maybe a few dozen out of what one would imagine is thousands of securities attorneys that you think would be able to help with this. But no, truly, you should try to find those who are really in the space, folks. And with that, I think we can go ahead and shift gears. I'm going to go ahead and get the webinar or our presentation set up here. But Robin, maybe while I do that, can you quickly maybe just highlight some of the clients that you've worked with in the past, just to, show some folks, that you've really been in the space?
I'm here. I'm here. I was having a little audio issue, so I just
Oh,
paused
you're
the
good.
speaking to see if that would catch up. Okay. Well, I think we're going to touch on some of these illustrative client matters throughout this presentation. And to your point earlier, I worked with you on the Security Token Group regulation crowdfunding capital raise that was hosted by Securitized Markets. We have helped facilitate the legals for Reg CF offerings, Reg A offerings, Reg D tech company offerings, and fund side offerings. It's always a sensitive topic of highlighting specific clients, without
Yeah.
seeking pre-consents, but there are a few sprinkled out this presentation that we can definitely call out as we move through.
And I'll even add to that, repertoire, that even some of the infrastructure, not just the issuers, they've also, I believe, they've come to you to work on some pretty cool initiatives. But let's get into it. So go ahead, Robin. I'm going to pass it over to you. Please give us the basics for anyone starting to get interested in this.
Okay, so Herwig and I put together this presentation in an effort to make this legal primer digestible and engaging, so that it's not just like sitting down and reading the securities law handbook that would very quickly put anyone to sleep. So the core focus of the presentation is on the subject matter of primary issuance, right? The world of securities law, and if we wanted to do a broad scope legal overview, we could spend an entire day on it. So for purposes of the next 15, 20 minutes, we really just want to focus on the concept of primary issuance. And to get that started, I thought it would be helpful if we just clarified what a primary issuance is, given the terminology, something that can sometimes be a bit in flux, and also to highlight the fact that Herwig's team recently put out a dictionary kind of helping clarify some of these things for the industry. So hopefully the summary definition that I provided here is aligned with what you guys have cited as well. But we're really talking today about the first time that a company is selling or issuing securities into, the quote unquote public market. This is the first release point. This isn't resale. These aren't secondary transfers. And these primary issuances can be conducted either through a registered offering, which we'll touch on, or through a private exemption. An exemption from what? Exemption from registration, as is otherwise mandated under the Securities Act of 1933. So we flag some of the most commonly utilized exemptions from registration in the tokenization space. And those are those that fall under Regulation D, those that fall under Regulation Crowdfunding or CF, as well as Regulation A. Regulation Crowdfunding and Regulation A are what people normally think of when they're thinking of equity crowdfunding. Both of these exemptions allow for retail investor participation. Aside from that, they're actually quite different in their mechanics and their requirements. Regulation crowdfunding offerings, for example, have to take place on a registered funding portal or broker-dealer website. Issuers can raise no more than $5 million per 12-month period in a Reg CF offering. There are investment limitations on investors. There are advertising restrictions, despite the fact that a certain degree of advertising is certainly permissible. Testing the waters is permitted actually in all three scenarios. And there are really, big checklists of nuances, but just to give you some of the high level points for Reg CF, those are there. Reg A now allows you to raise up to 75 million per 12-month period per issuer. Kind of interestingly with Reg A, the 75 million cap is literally on a per issuer basis. So a sponsor team could set up multiple Reg A offerings within that year and raise 75 million for each offering, which is kind of a fun fact that often becomes quite relevant and is distinguished from the regulation crowdfunding scenario where you look through at management and that multi-entity capital raising strategy wouldn't work. You'd be limited to 5 million across all offerings. Reg D, Regulation D allows for unlimited capital to be raised from an unlimited number of accredited investors. And then there are further nuances depending on whether general solicitation is a priority or not.
Fantastic. No, and there are, even more, out there, but I think this is the majority of where people should spend their time, actually, working to figure out what is the right one to be using for their offer. I'm going to highlight really quickly that we have talked about it the last few days. There is the concept of a public registration. So everything we just talked about is how a company stays private and is able to essentially let the SEC know they're raising money under a certain rule, which means they're following a certain set of criteria in order to comply with that. Whereas with you actually registering with the SEC, you actually, of course, get the ability to tap into the full public at the cost of much stricter audits and disclosure requirements. So obviously firms like Franklin Templeton and Wisdom Tree, they've been, very capable of making sure that they can get their funds registered and on chain at the same time. In much of what we see in tokenization, we typically tend to stick to these private markets where you'll end up leveraging probably most likely one of these three exemptions. And in this case, we're going to give you some case studies to actually get into exactly what we're talking about. So with that, I'm going to hand it back over to Robin. Let's talk about, real estate, one of those hot use cases.
Okay, amazing. So within the world of tokenized real estate, first we feature just a few of the common structures that we see come to market. There we have these single asset deals where there's one piece of real property and that corresponds with one token, right? So the token represents 100% ownership in that property. And interestingly, there is a company called Proppy that is utilizing this model that we certainly support and that I wanted to showcase here. The second I cite a kind of throwback OG offering, which was the Aspen coin. It's kind of a loaded topic for those who are aware of it. So certainly no endorsements there, but I think that it is the first to market of this category. And this is where a single asset is put into an LLC and then fractionalized ownership within that LLC is sold off with one, let's call it unit of membership interest corresponding with one token. This is something that we're seeing, this model generally kind of dominates the market in and outside of real estate when it comes to the tokenization of assets. And then thirdly, I wanted to highlight something that I recently saw on the Securitize platform, which is the Mancipi Real Estate Investment Trust, which is a Spanish product. And they fractionalize ownership interest in a REIT. On the right side of the page, we just highlight that there are no restrictions. Use your imagination as to asset type and project kind of category that would be eligible for structuring in a tokenized real estate scenario. As we move into the next slide, we take a closer look at a platform that actually recently came to my attention called Honeybricks. I think Honeybricks is just a great example for a couple of reasons. But for purposes of this presentation, it really is a nice entry point to some of these Reg D topics that we started to speak about on a prior slide. So Honeybricks is operating a Title II Reg D platform. They are not a broker-dealer and they are not required to be a broker-dealer to operate compliantly as they are. And that's because of Rule 201C of the Jobs Act. 201C is a new exemption from registration under the 34 Act requirement to be registered as a broker-dealer for an internet-based platform that's facilitating Reg D offerings. The scope of the exemption doesn't go beyond Reg D offerings, so they really are confined to that Reg D activity. And as a 201c exempt platform, they're able to do a little bit more than just providing that internet marketplace for connecting investors and issuers. They're also allowed to co-invest in the securities that are being sold on their platform, which is something that Honeybrick says that they in fact do. They're also able to provide due diligence services and also provide standardized documents for their customers, whom are those issuers' use. I think this is, I wanted to highlight this because I think it's a really interesting business model. I have quite a lot of people who come to me looking to explore whether they need to be registered or what the limitations and parameters are on their activity operating an internet-based platform. And many people aren't aware of this. So Honeybricks really allows us to feature that concept. The Honeybricks platform facilitates the sale of tokenized LLC interests. So think Aspen Coin, but they do this for third parties, and they also do this for some of their own products. So what that means is that they, as a platform, set up an additional entity to act as a syndication vehicle or as a fund vehicle. And they provide in the corporate organizational documents and corporate governance materials language that allows for tokenization and fractionalization in order to have the effect of being able to distribute these tokens that correspond with those underlying securities. You're on mute.
My bad. I actually love that use case too. And I do want to also highlight that many times you see issuers and they say, hey, you know, how can I follow the footsteps of someone else like this? And we also see entrepreneurs and others say, hey, you know, because I have a huge portfolio or a huge network, how can I replicate something like Honeybricks and create my own platform that I can sort of monetize? And that's something that Robin definitely can help on both ends. Let's move on to another case study here. I think this one's pretty unique. Maybe some folks haven't even heard this one. You want to explain creator finance for us, please?
Yeah, absolutely. So something we're seeing really trending over the last maybe 18 months is this somewhat new concept where creators, whether they're artists, musicians, influencers, internet stars, right, who are generating pretty substantial revenue for themselves and are starting to have a healthy track record, demonstrating their capacity to earn through content creation, you know, of whatever form that is based on that activity that they're engaged in. And Gigastar Market is a regulation crowdfunding funding portal that we supported in their application to the SEC. They're now live, and I think they've launched at least 6 issuers offerings. A couple of them are Let's Talk Money, StockMo, Clear Value Tax, and these are YouTube stars who are looking to sell off and monetize a portion of their future revenue, and they do that through setting up an entity that acts as the issuer and then entertaining a variety of behind the scenes contractual agreements that obligate them to disperse this portion of revenue to that issuer entity. And the crowd participates through the acquisition of revenue sharing units. And those revenue sharing units are tokenized. So when you go to the Gigastar Market funding portal environment and you make an investment subscription and it's accepted, you in turn receive a digital asset security, and that digital asset security entitles you to participate in those distributions if and when they occur in the future. This is really cool in my opinion. It's just excellent for this new kind of creator class, this new segment of our economy that's really emerging, and seems like it's going to continue just to grow and evolve as time moves on. It's also kind of a new expression of what a funding portal is able to do, both within the tokenization side of things, but also in support of these creator financings. Very briefly, these funding portals are registered with the SEC and FINRA, so they go through their own registration process on the front end and then continue to be subject to FINRA oversight as time goes on. We could have a whole discussion on that as well, and if anyone's interested, I'm happy
we
to
might have
discuss
to
it.
someday. We might have to, but I will say this hits all the buckets. I totally agree with you. It shows you a new asset class that, really anybody, even institutions, they couldn't invest in this. This is a new trend across the board. Although you do see now private equity funds buying the masters of very famous artists like Justin Bieber recently, selling his for, I think, over 100 million, or a very large tune. And it leverages tokenization to such a use case, tapping into distributions, potentially adding functionality down the road for token holders, for being fans, and being able to prove that they are super fans as a result of being token holders. And naturally, of course, the efficiencies of managing a whole audience of investors, thanks to tokenization, making that much easier for Gigastar to do. I absolutely love this example. I'm going to try to tackle this next one. We just had Securitize on before you. Carlos gave a quick overview of the ecosystem that they built. And so I think that's the use case here, is it's not just limited to tech startups. Naturally, many other companies and funds, as we've heard, are going to Securitize and similar platforms like it. I want to highlight not only the fact that we did an offering with them, which was a very cool experience, but the Exodus raise caught a lot of attention. And I think this is a very cool way to talk about the Securitize ecosystem. As we learned, they have a transfer agent. So if you're going to go ahead and raise money for your tech startup, you can leverage their tokenization platform. You can leverage their transfer agent to manage basically to manage your back end, your cap table, and all your admin related governance. But if you want to do your own distribution, you don't need to go any further with Securitize. You can actually manage this yourself and try to bring in your network of investors. Now, they also have a broker dealer, so they actually can go ahead and help you raise capital. Again, depending on which exemption, they might be able to not just host your offering, but actually be able to help find capital, depending on the circumstances, which is very different from then acting as that listing agent, which we saw do with Exodus. Exodus went ahead and they raised money digitally. They actually, a lot of that money came in from their own customers through their own platform, through that Reg A that they used. And then eventually they listed onto Securitize and other platforms as well. So they went through the full ecosystem of how a tech startup can go ahead and raise which was at the time the first company to be tokenized to raise the full 75 million that had been changed from 50 that Robin had mentioned earlier. So a really great use case. Of course, again, very similar experience. Because Exodus is a wallet company, users had their wallets set up. They were very easily able to make that transaction happen. A really cool experience to see come to life. Robin, did you want to add anything to this case study?
My only comment here is from a payment processing perspective. I thought this offering was pretty interesting because they allowed subscriptions to be funded in crypto with like kind of this automatic feature where upon the subscription, the digital asset securities would be, automatically distributed into the wallet of the payee. And I hadn't really seen that before, but that's something that's taken off quite a bit since that time, where crypto as a form of payment is being integrated into more and more environments with kind of complex and webby backends that have to be really intentionally designed to make that happen compliantly.
Yeah, no, it was a very seamless experience for anyone who got to see that. The last one I just want to end on, since we are out of time, is the fact that you can leverage these kind of unique examples of 506 B or C, just doing Reg D by yourself. You can leverage a funding platform, or you can go all the way by leveraging a broker dealer, or you can do this completely on your own. You can just go straight to Robin. Maybe you already have an amazing network. As long as you can fill in that tokenization and that hosting piece, which we went into detail in our How to Tokenize session just before, you should be able to go ahead and do this completely on your own without any help if you don't need it. I think a really cool example I want to highlight is Mercedes-Benz Financial Services. This is the financing arm of Mercedes-Benz. They're actually responsible for all of the leases that they do for their Mercedes cars. And one of the sources of capital that they raise money for is a demand note program, which essentially enables customers to buy into Mercedes notes that give you a return. They seem to try to stick to the treasury type competitive rates, but it's backed by Mercedes-Benz, and it's in a bank account that you can go in and out of, and they're using 506C, and they've raised billions, over $1 billion through this method without necessarily needing to tap into any of these other solutions. So just wanted to highlight that everything is possible, but it's only possible with the right support. So I highly encourage you that if you are in this space and you're looking for an attorney, to consider reaching out to Robin, so that she can go ahead and give you a good setup or good guidance, or even better, if she can actually work with you on what you're doing. I imagine you'll be very pleased with the results like we were, but unfortunately we are out of time. Robin, did you have anything you wanted to close on for our audience?
I'm super grateful to be here. I appreciate all of the support, and I'm certainly here to help. So if you want to reach out and have a legal matter to discuss, we can get on the phone and go through it. Thank you, and good luck with the rest of the conference today.
Thank you, Robin. See you soon for the next session, everyone.